Okay,
yes,
so check out
please.
this video.
A former one that works at Apple now.
It's good. He's done well.
Designed it for you. And the base
This is a
comes
gift from Apple to Trump.
24 karat gold.
24 karat gold.
And it sits, I'll take the liberty of setting it off. Congratulations,
Thank you
Mr.
very much.
President.
It's
Thank you
fantastic.
so much.
So this is something,
please.
you know, Trump kind of has the personality where he would like these gifts, and he might even give Tim Cook and Apple favorable conditions because of a simple gift like that. So that was very keen of Apple to do. Now today, so here's Apple's chart. Let's check out the S&P. So the market is down today. It gapped up, but it's basically trended down the whole day. Then if you go over to Apple, notice Apple gapped up, but then it's basically held its position. So Apple is up 2.7% right now, while the market though is down 1 or 2%. So if Apple spends $50,000 or whatever they spent on that gift, but the company's up 2% the next day, so the company is up 20 billion. So let's say they spent 20,000 on the gift, but then the company gains 20 billion from a gift, then that's a great deal for them. And you know, some companies have kind of already done this. They've kind of bowed the knee to Trump and been very favorable to him. And actually, that's what a lot of companies did at the start. If you remember, during his inauguration, Elon Musk was there. I believe Zuckerberg. I think Bezos was there. Maybe not Bezos, but a lot of the important CEOs were there in the room. And immediately they all changed their tune once Trump came into office. And, you know, I would imagine that they really would do this for any president. They would do whatever is favorable for the company. If being nice to the president is good to the company, then they'll do that. Or if being mean to the company, if being mean to the president is good for the company, then they would do that as well. So whatever they determine is best, then they'll do that. And with this president, then they're determining that the best thing is to be on his good side. So I would expect more companies to give gifts like this in the future. It's a pretty simple analysis to see a gift was given, it cost $20,000, but they got 20 billion of value out of it. So that being said, let's go ahead and review today's price action. It's kind of early, we still have a couple hours left, but you know, we're already here recording. The first thing I'm going to point out, the market gapped up. Market gapping up doesn't really mean it's going to be a bull trend day, but what it does increase the chances of is that it's going to be a trend day. So either side might make it, but what really changes the odds is that it's going to be a trend day, not so much the direction. So what do we have so far? A trend day. The market was really excited to be trending overnight, and now we're just continuing to be in a trending type of market. So the first thing I have here marked is this short here. Now, I would not take this as a scalp, so I would not try to get just a handful of points out of it. I would rather try to do a swing trade. If today is going to be a bear trend day, then we're probably pretty high up in what that bear trend day will be. Okay, first bar is a bull bar. Market tries to go higher, and it can't. It tries again to go higher with this other bull bar, and it can't. Usually when the market tries to do something twice and it fails, then it usually gives up and goes the other way. So 2 moves up that have failed. You can call this a double top or a triple top, and then a pretty strong bear bar. What are the odds you're going to get a big trend like this? Not too high, but the huge profit potential is what offsets that lower probability. So we have a couple things working for us. There is a huge profit potential if this ends up being a trend day. We have, at this point, there is an increased chance that we would get this reversal. You know, we're not just selling somewhere up here randomly, trying to hope that we get a bear trend day. This is a very targeted entry to say, yes, it's a low probability entry, but with it, so what's the odds that today will be a bear trend day? Not that high. But once we have this targeted entry, then our odds are increased. And those so the expected outcome is positive if you're trying to short here, if you are going for a swing trade. So at a minimum, I would say 2 times your risk. And I think this would be an appropriate first step. 2 times your risk. You do have to go through the moving average, but that's not too big of a deal. And you're also getting out below before the close of yesterday. So that's an important level there. So you're getting out before that, and you still get your 2 times risk out of it. If today's going to be a big bear trend day, maybe you would want to try to do only half. So you take off half at this 2 times, and then maybe let the rest ride. Different ways to manage it. Maybe you could just go straight for 4 times your risk. So half off at 2 times, and then the other half off at 4 times your risk down here. Or if you see some kind of reversal pattern, then you could get out after that. So for example, maybe you see triple bottom here, and so you would exit above this bull bar. Although I don't think you need to exit there, but we can talk more about this area later. But that's this is a potential swing trade for an opening reversal into a trend, and this is something that you can look for every day. Like yesterday, there was quite a bit going on. So let's say yesterday you try to short below this bear bar. You would say, well, there's a possibly double top here with this first bull bar fails, and then this second attempt to go higher, and then a bear bar. So this would be an example of where your opening trade would fail. You sell below the bear bar, you're trying to get out 2 times your risk, and then you fail. And you will lose the majority of these trades, but then the ones that you do win, your large win will offset those losers, ideally, if you're taking the right entries. And once you do get these 5 bear bars down, I think that really does change the structure of the day. That's a lot of selling. Broke right through the moving average. Then once you're stuck below the moving average, that also kind of changes the structure of the day. It's kind of like yesterday. We were kind of going back and forth, but then we got above it, and we could never really get below it. And once the market gets stuck above or below the moving average, it usually continues to do that. And today has been stuck below the moving average all day. One way to trade trends, and there's a few ways. One way is to look at a lower time frame. So when you see the market break or crash below the moving average like this, and you see this fairly weak pullback, go down to a lower time frame, like a 1-minute chart or a 2,000 tick chart, and try to look for shorts once the market gets up here to the moving average. And then what you're doing is you're keeping your risk low. You're still able to find an entry, and then your profit potential is still potentially huge. So if you really want a targeted entry, then look for these pullbacks to the moving average on a lower time frame. So let the 5-minute guide your lower time frame trades, because on the 5-minute, unless you're just kind of blindly selling through here and scaling into this, there's not an entry here. So unless your type of trading is to just sell into this, which is fine, there's nothing wrong with that. I mean, I think normally people should actually have an actual entry set up. But so unless you're doing that, then go down to a lower time frame and just apply your same system, but on that lower time frame, so you can actually find some entries while also still keeping your stop close. So for example, now we are on the 1-minute chart, and this is about that same area of the pullback we were looking at. So you'd want to try to find different shorts through here. This bear bar, market did not go below that, so that wouldn't trigger. You have a bear bar here. If you took that, you would have lost initially. Then now we've had several attempts to go above the moving average, and then this very quick failure. So you could try to sell below that bear bar, or try to sell below this pullback here. And so just for example, you look at this area and you'd say double top, triple top, market breaks above it, fails, tries again and fails again, and then this really sudden failure. And then 2 times your risk puts you down here and you just kind of ride that down. Or you do the other entry here, smaller risk, and then you get out much quicker. But so that's how I would look at something like that. When you understand that a trend is likely, but you can't quite find an entry on the 5-minute chart, or if you want to keep your risk lower, then go down to a lower time frame. There's nothing at all wrong with that. That's a very good way to go about this. And something that's been happening all summer is that these pullbacks to the moving average, and then once you get a bear bar, if you short below that bear bar, that's been working a lot this summer. And one of the critical things about trading is staying up to date with what's working and what's not, because you'll have some themes of the market, or you'll have some time periods in the market where trying to short here, for example, this is a great short. It's a wedge. First push, second push, third push, then you get a bear bar at the moving average. That's a great place that I love to short. But sometimes you'll have like a month or 2 or 3 where this trade doesn't perform very well. But if you're keeping up with, if you're logging these, and you can look back and you say, okay, for the last 2 months, or let's say the last month, this has been actually working out pretty well, and maybe we're in a different phase of the market now. The market is having a different personality right now. It's having the personality where after a big sell-off and then a pullback to the moving average, it gets sold. And then by keeping that log, you know that that type of setup is currently working. It's currently performing. It would give you profit on average. So, that's something that a professional trader is doing all the time. They have their list of setups. Maybe they have 1 or 2, or maybe they have 5 or 10, but they are keeping track of what's working. And if they can look back and say, yeah, the last few weeks, last month has been really great for this kind of setup, then they're going to continue to do that until they might have to take a few losses on that setup. And then they recognize that the market has changed and then it's doing something else. And so you always just want to stay in these kind of optimal areas. Yes, like these 3 or 4 setups are doing well right now, so I'm going to do those. And then if they aren't doing well, then I'm going to stop doing those. And so, that's one way that makes trading hard is it's not just about the setup, because the setup's not going to work every time, and you'll go through these patterns where the setup won't work. Then you'll go and then if you wait, then you see it and it's like, oh well, all summer long this setup's actually been working pretty well. So one of your goals in trading is to find something repeatable, and then your second step after that is to keep track of it. And if it's working, then take that trade. And if it's going through a phase where it's not working, then hold back and look at one of the other setups that are working. Another potential idea to trade days like this is to try to scale into these pullbacks. So if you're in a strong trend day, usually that pullback is going to be sold. So if it's a strong bear trend day, pullback to the moving average, it's usually going to be sold. And so this creates situations where you can make swing trades out of it. So for example, here we have this first bull bar. So 5 bear bars and then a bull bar. And so the idea with this would be sell the close of that bull bar and try to go for a swing trade. Okay. So how much do you risk? In this case, you had to risk about 4 points. And I have the average true range on the bottom. So this is another important tool, because this average true range is the average range of the last 10 bars. And it tells you how big the bars are. So if the bars are twice as large as they normally are, then you would need to make your stop and profit twice as large and then trade half as large to make everything still even. So something I like to do is I like to risk 3 points here. So I would risk 3 points. Then I'd try to go for 10 points if I was to do this. So I'm selling the close of this bull bar. I'll risk 3 points, then I'll go for 10 points. But since today's range is around 8, that's actually twice of the average range that I consider for this trade. So I would then need to double it So say risk 6 points and then go for a 20-point profit target. 20 points would put us down here. So not only is that a trade idea, but also, I explained there how you use your average true range to adjust your profit and risk. But yeah, I mean, that's actually a pretty useful trade if you can tell you're in a trend. And at this point, I would say definitely we're in a trend. We've double topped, 5 strong bear bars down. The bears are winning. Good chance we're going to at least not have a bull day, and probably going to be a bear day. So we want to try to sell into these pullbacks. And, so you want to continue to swing trade. So risk 5 or 6 points and then go for maybe 15 or 20 points and try to get out down here. So you don't lose that much, but then when you do win, then you get a pretty large win. And you can apply the same thing here. So bear trend, first pullback. So you sell that bull close. Put your stop of 6 points up here. Then you try to go for 20 points and then you get out down here. So you can see today I only have 2 entries marked. So here would be a possible third. And all of these are swing trades, by the way. I wouldn't want to scalp any of these. So then this third one is also a swing trade, because you've now double topped here. You're in a bear trend. Now you've double topped. So this would also be a reasonable place to try to get short. Go over 2 times your risk, and there's your 2 times your risk. So if you're not wanting to do these kind of entries, then I've outlined your other 2 options. One is to try to look for pullbacks, go down to a lower time frame, and swing trade on those, or just trade the pullbacks on the 5-minute chart and sell this bull close, for example. Put your stop 5 or 6 points away, and then go for 10 or 20 or 15 or 20 points, and then you just do that a couple times in the day. So trading a bear trend like this, those are really your 3 options. And as long as you're doing that, I'm not going to guarantee you're going to profit, but you're going to be a lot better off than trying to do something other than those 3 options. If you're trying to like find the low, catch the low, and then you're really at risk of just being on the wrong side all day. This is something I talk about. I mean, all of these ideas are something I go over in the course, but the big thing about it is, and so this is something that I'll tell anyone. If it's a bear trend, only focus on shorts. If it's a bull trend, only focus on longs. And that will at least keep you out of trouble. I'm not going to guarantee you're going to be profitable just off of using that. You're going to be way farther ahead than someone that's not doing that. So I think I kind of talked about some of the intricacies of trading in this video. I touched on different topics. It's not just about the setup. Your setup alone is not going to get you where you want to be. There's all other kinds of things. Yes, it's a trend, but how do we know this early that we're likely to be in a trend? Or how do we know what direction it might be? How do we know that this is likely just going to be a pullback instead of a full reversal, and then we come up here? So there's all kinds of little things that go into it. It's more than just looking at the setup itself. And these are all topics that are talked about in the course. A lot of these have full hour-long video lessons just in that one topic alone. So the course, if you want to study on your own time, then that is definitely the way to go. That would put you years ahead of someone that is not studying in that way. So that's all I have. I'd like to make more news-related videos like the one with Tim Cook and Trump at the start. But there's so much news going on with Trump, it's impossible to keep up with all that. But thank you guys for watching. Tomorrow we have an interview with a day trader, and we're going to be posting that tomorrow. So make sure you guys are watching for that interview. All right, see you guys.